Bond yields, they pulled back just a bit. The dollar down about 0.5%. A lot of people believe that's tied to that poll in Iowa showing Harris with a lead, again, within the margin of error, but with a lead. In your mind, is that a sign of the Trump trade, and is there some reaction that investors should have?
Yeah, I think, Frank, actually, it probably is. I mean, we've seen a pretty surprising rise in 10-year rates and tied largely to term and inflation premia. So not really an expectation that growth is going to be a lot better, but some fears that really, frankly, inflation might be a little bit hotter than the market is generally comfortable with. And so, when you see, and that's obviously coincided with Trump really skyrocketing some of these prediction markets that you mentioned earlier. And so, any hint that red sweep possibility may not end up happening, makes sense for the 10-year to be pulling back here.
All right, so you say it makes sense. The next couple of days, we could have some uncertainty about who wins the election. We could have some contesting of the election. In your mind, does that potentially lead to volatility? And same question, should investors react, and if so, how should they?
Yeah, I mean, look, I think one of the underpriced things that folks are looking at right now is just having this election being over. Actually, it probably is a good thing, and having it be over, over is not sort of the final thing. Do we know who the president's going to be? Is it going to be final? If we know that by Thursday morning, or Thursday afternoon, it's actually probably a good thing. It's not something that market's necessarily expecting, and so that just having this thing be behind us probably will end up being a boost. As for who ends up winning. If it is Trump, it's likely going to be the red wave. And so if you break things down into sort of fiscal, tax, and regulatory policies, it's probably positive on all three of those fronts. So it's probably good for stocks, bad for bonds, but probably not as good as 2016, just because the starting place matters. And as you mentioned earlier, the starting place this year is 10-year rates at 4.3%, whereas in 2016, 10-year rates were at 1.8%. And so just not quite as much juice there.
All right, let's talk about earnings. Again, this week we have about a fifth of the S&P reporting, but last week we had those Mag 7 reports, a lot of big tech names. I'm just looking at the Mag 7, down about 1.75% last week. The S&P kind of traded lockstep with the Mag 7 stocks last week. In your mind, when we're looking at mega cap tech, is this an opportunity, or do you want to kind of wait things out? Because again, we have a huge week. We have the election and also a Fed decision.
Yeah, I mean, it is obviously a huge week, but this is an opportunity. This AI train is just really getting going, frankly. And obviously the market's worried about CapEx, is worried about things that it typically worries about in the short term. But we can't take our eye off the medium and long term aspects. Every single company in every single sector in this and every other economy in the world is spending money on AI, and they're trying to grow, because if they don't, if they miss this train, they probably die. And people remember what happened to companies that did not embrace internet and PC revolution of the mid to late 90s. They just went away. And so companies aren't going to make that mistake this time.
All right. So, Scott, you actually gave us some Trump win plays and some Harris win plays. If Trump wins, you believe small caps and also industrials kind of tied to manufacturing, the idea that we may see an expansion of tariffs and there'd be more domestic production. Then for Harris, you believe we're going to see a relief rally when it comes to retail and also mega cap tech, big cap tech benefits. I want to go first with the Trump play with the small caps. So you believe if Trump wins, that accelerates the small caps up just about 9% year to date, a little bit over that right now. Exactly what is it that gives a boost to small caps in a Trump win scenario? Just very quickly, because I want to get to Harris as well.
Sure, it's basically two things, Frank. It is higher nominal GDP growth, which is good for small caps, and is less regulation. But both those things are powerful tailwinds.
All right. So on the Harris side, you believe there's a relief rally when it comes to retail. I mean, some of that's on the idea that there, again, will not be an expansion of tariffs, kind of the inverse there. But retail's really kind of lagging. I think some of the concerns there are that the idea that the consumer's pretty stretched. If Harris wins, how does that change that narrative?
I don't think it changes on the narrative on the consumer, Frank, but actually I think that's kind of a false narrative. This is a consumer that's still getting income gains of 5, 6, 7% year over year. And people spend money when they have it. So the overstretched consumer, we've been talking about it for a couple of years now, or everybody's been talking about it a couple of years now. We don't really think it's there. But as far as relief rally on terms of the tariff hangover coming over, these names take on some margin pressure if you get tariffs. It's not other countries that pay it all. It's not consumers that pay it all. It's not companies that pay it all. It's all three that share some of the burden of higher tariffs. And so the companies bear that burden through tighter margins. And so if it were to be Harris, those tariffs are off the table, and they probably rally.